All right, everybody, it is Tuesday, August 4th. One word for you, gold, gold. I've been talking about this for a long time, folks, if you've been following me. Fundamentals for gold have been bullish for a long time, but now people are catching on. Now there's a story behind it. The narrative has shifted. Way back in 2015 when I got into it and I was writing about it, and then, all through these years with my subscription, I've been talking about the fundamentals of gold, specifically, how monetary policy affects it, and, that could be both bullish and bearish, but mostly how the fiscal expansion would eventually lead to a weaker dollar, higher gold prices. It's happening now, but the narrative is starting to catch on to this. It's slightly, I would say it's slightly off, the narrative, slightly wrong, but it's now, I guess, the idea of gold as an institutional asset, as a risk mitigating asset, that's becoming more embraced, especially with interest rates very, very low. So you have now institutions where maybe before they wouldn't even consider gold, now looking at it. So it has legs. It definitely has legs. The other thing is that we are now starting to see a reduction in Treasury sales. I talked about this, about how the Treasury's account at the Fed, they ramped it up to over 1.8 trillion. That was historic. For years, for decades actually, the Treasury never held more than like 300 billion in its account. It functioned, completely well with that. Sometimes it dipped down under 100 billion. There were little spikes every once in a while, maybe over 400 billion, but we never got close to the 1.8 trillion that we hit recently. And that was the result of massive historic amounts of Treasury sales. Now, Treasury sales are a reserve drain, right? It's not borrowing. People, look at all the money we're, no, they're a reserve maintenance function. They function in the aspect of reserve maintenance. The Treasury sells securities, and in cooperation with the Fed, that's how they manage reserve levels to maintain a target interest rate, all right? So while the Fed was adding all these reserves from last September into March of this year, trillions, the Treasury was at the same time helping to limit the growth of those reserves by selling more and more Treasuries. So that was draining out a portion of what the Fed was adding. And when you drain out reserves, what's that? It's like draining cash out of the banking system. So that leaves ostensibly less cash around for other investments, although reserves did hit a record high. But now Treasury sales are starting to come down, and with gold being viewed more, or being accepted as kind of an institutional asset, an asset that institutions can own, this could trigger even a bigger flow into gold. And I said recently in my report, I think it was about 2 weeks ago, I said that the gold rally, and I think we were trading like 1950 or something at the time, maybe below that. I said the gold rally may still be in its early stages because of this kind of paradigm shift, the way people are viewing it. But we'll see. The dollar resumed its downtrend today. As I said yesterday, you sell into dollar rallies because the fundamentals underlying the dollar, they are bearish long term. It's not going to crash. It's not going to be some crazy sell-off. And there are going to be rallies where people are going to say, hey, King Dollar is back. You had that over the last 2 days when you got a little bounce and everybody was like, oh, the dollar's coming back. That's it. The sell-off is over. Those are the best kinds of bear markets because they endure, they linger, they play out over a period of time, and they give you plenty of opportunity to go short, whatever it is, that currency, that security. I'm talking about shorting the dollar or buying the other currencies, euro, yen, British pound, Australian dollar, New Zealand, Canadian. Let me talk a little bit about the fiscal flows. Yesterday I made a video and I said, I don't see any. There's a slowdown in the rate of growth of spending, but there wasn't a slowdown in the nominal amount, like the total amount spent, and that's really the important number. And today, even a higher level, when you look at that year-over-year increase in today's numbers, even greater than it was yesterday. However, I did find one thing, and this is the obvious thing, but it was there when I looked for it. Unemployment benefits dropped, I would say, fairly significant compared to other beginning of the week periods. In other words, the Mondays usually had the biggest payouts. This Monday had 4.5 billion, and prior Mondays going back to May had 7 billion, and in April about 6 billion. So it's starting to show up. This is obviously Monday. This is the first day of the first week where we're not having that $600 a week supplement. I'm seeing it in the numbers. It's going to take time to develop. Right now, however, because it was only one single day's worth of data, the other spending line items have offset the decline that we saw with unemployment benefits. So got to keep an eye on that. Stock market up, not surprising given these fiscal flows are so enormous. We need to see these slow down. And like I said yesterday, if they don't slow down for whatever reason, stock market will go up, I think, until the point where people start worrying about inflation. I mean, there may be some element of that in the gold rally, which is a prediction or a notion that we could see an uptick in inflation because of very expansive fiscal policy and an economy that is running at an output level below normal. See, I talked about this once before. It's not about the money supply. If the spending equates to greater output, more supply, more stuff, right? Then the price doesn't necessarily go up. But if the spending increases and you cannot increase output, then you have a problem. Then you have real inflation. So we got to keep an eye on that. Anyway, go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. And I just finished recording my new podcast. It'll be out tomorrow. So don't forget to check it out. See everybody tomorrow. Bye-bye.